You are listening to Uranium Spotlight on Tuesday, February 18, 2025. Brought to you by Purepoint Uranium Group, your exploration partner in the most prolific areas of Canada's Athabasca Basin. With a collaborative investment model on district-scale projects and validation from industry leaders Cameco, Orano, and ISO Energy, Purepoint is investing in Canada's uranium future. And now your host, Chris Frostad.
This week on Uranium Spotlight, we look how investors should be taking advantage of this mid-cycle dip, new nuclear applications, and Spain's reversal of attitude towards reactors. The spot uranium market closed last week at $63.30 a pound, continuing to drift down another $3.40 from the previous week. Spot uranium prices have been in a steady decline since last spring, while the long-term price has continued its slow, steady climb, now surpassing the spot. This divergence highlights an important dynamic in the uranium market. While short-term volatility in the spot price can create uncertainty, the strength of the long-term price reflects the confidence utilities and long-term buyers have in future supply constraints. Historically, uranium bull markets have seen periods where the spot price lags, only to surge later as contracting activity accelerates. With supply challenges persisting and demand for nuclear power continuing to grow, this long-term price strength suggests that while the spot market remains weak, the underlying fundamentals are setting the stage for the next move higher. Spotting the best uranium juniors before the market catches on requires understanding both fundamentals and investor psychology. Too often investors wait for confirmation, buying late in the cycle when prices are high, only to panic and sell during inevitable pullbacks. The key to success is recognizing value early and positioning before the broader market catches on. The uranium bull market remains intact, but the price spike and pullback seen in 2024 was a classic mid-cycle correction. After uranium surged past $100 a pound, driven by financial players and supply chain disruptions, retail investors piled in, expecting a straight path higher. As is typical in commodity cycles, this sharp rise was followed by a cooling-off period, with prices retreating to under $70 a pound. History shows that mid-cycle pullbacks shake out short-term speculators, allowing long-term investors to accumulate at more attractive valuations before the next leg higher. For those looking to spot promising uranium juniors early, understanding these cycles is crucial. The best opportunities come when sentiment is weak and quality projects remain underappreciated. Juniors with strong management teams, well-positioned land packages, and smart financing strategies are best equipped to weather short-term market fluctuations and thrive when the market turns. Institutional investors recognize these cycles and use mid-cycle pullbacks to strengthen their positions. While retail investors exited on the 2024 correction, major funds and utilities took advantage of the price decline to secure long-term supply contracts. This behavior suggests we're in the middle of a sustained bull market, with higher prices ahead as supply constraints tighten further. Uranium juniors with solid fundamentals remain positioned for significant upside. Companies that can secure financing at favorable terms, demonstrate strong drill results, and operate in proven uranium districts tend to outperform as the cycle matures. Those who position early in the right juniors before the next upswing can capture outsized gains as institutional money returns to the space. One key indicator to watch is utility contracting. Historically, the final phase of a uranium bull market is marked by aggressive long-term purchases from utilities. In 2024, while contracting activity increased, it has not yet reached the levels seen in past cycle peaks. When utilities begin securing large volumes of uranium at rising prices, it typically signals the final surge of the bull market. Until then, the current cycle remains in play, and investors should be looking to accumulate quality names before the next leg up. Mid-cycle corrections offer opportunities, not reasons to exit. The uranium bull market is still supported by structural supply deficits, rising demand, and geopolitical factors limiting new production. Investors who recognize these trends and position accordingly stand to benefit as the next phase unfolds. Those who wait for clear signals risk missing the biggest gains, as history has shown that uranium equities often move before sentiment fully shifts. Spotting juniors early requires patience, but the rewards can be substantial for those who recognize opportunity before the market does. Nuclear energy is increasingly being recognized for more than just power generation. Engineers and researchers are developing new applications, some of which are already in limited use, that could expand nuclear's role in global energy markets. These innovations not only enhance nuclear's value proposition, but also strengthen its long-term demand, key considerations for investors in uranium equities. One promising application is nuclear district heating, where excess steam from reactors is used to heat homes and businesses. Instead of relying on natural gas boilers, significant contributors to carbon emissions, a single reactor can provide clean, low-cost heating for an entire city. This approach is already in operation at several Chinese reactors, with expansion plans underway. The economic advantage is clear since the steam is a byproduct of power generation. District heating via nuclear is significantly cheaper for consumers than traditional fossil fuel-based systems. Another practical use of reactor-generated steam is nuclear desalination. Seawater can be used to cool reactor turbines, and the residual heat can then be harnessed to remove salt, producing fresh water for drinking or industrial use. Unlike conventional desalination, which is energy-intensive and costly, nuclear desalination takes advantage of an existing energy cycle, making it both efficient and scalable. China has already implemented this technology for industrial cooling, with plans to expand it for potable water production. Given that water scarcity is a growing global issue, this application could drive further investment in nuclear infrastructure. Beyond steam applications, nuclear power can enhance energy storage and grid reliability. Because reactors run continuously, they can be used in pumped hydro energy storage, where excess energy is used to pump water uphill during low-demand periods, then released to generate electricity when demand spikes. This makes nuclear an ideal complement to intermittent renewables like wind and solar, reinforcing its role in a diversified energy mix. Nuclear energy is also well-suited for industrial heating, steam generation, and hydrogen production, all of which are crucial for heavy industries such as steel manufacturing and oil refining. With global pressure to decarbonize industrial processes, these nuclear applications could create additional demand for uranium and advanced reactor technologies. Looking beyond Earth, nuclear could play a pivotal role in space travel. The U.S. is actively testing nuclear thermal propulsion, or NTP, for missions to the Moon and Mars. Research by General Atomics and NASA's Marshall Space Flight Center indicates that nuclear-based propulsion could be 2 to 3 times more efficient than traditional chemical rocket fuels. This technology is still in the experimental stage, but is proven viable. It could open a new frontier for nuclear energy applications. For uranium investors, these emerging technologies add layers of demand potential beyond conventional power generation. While grid-scale nuclear remains the core driver, these innovations could further solidify nuclear energy's role in the global clean energy transition, and by extension, the long-term outlook for uranium markets. Spain is making a major shift in its nuclear energy policy. The Spanish Parliament has voted to begin repealing the country's nuclear phase-out plan, opting instead to keep its 7 reactors across 5 nuclear power plants operating for as long as possible. The proposal directs the government to ensure the economic viability of these facilities, recognizing nuclear power's critical role in the energy transition. Lawmakers emphasize that nuclear provides a secure and stable electricity supply, helps lower power prices, and reduces greenhouse gas emissions. In a move that could have broader implications for the uranium market, the proposal also calls for the repeal of legislation banning uranium mining and processing, along with restrictions on other parts of the nuclear fuel cycle. If implemented, this shift could open new opportunities in the uranium supply chain and signal Spain's commitment to long-term nuclear energy use. And that wraps up your Uranium Spotlight coverage for this week. For more news and events from the world of uranium, please tune in next week to Uranium Spotlight.
You've been listening to Uranium Spotlight, your weekly podcast dedicated to delivering the latest news and events shaping the uranium fuel market and its critical role in the global energy landscape. Brought to you by Purepoint Uranium Group. Purepoint actively operates a portfolio of advanced uranium projects in the world's richest uranium district and has established partnerships with industry leaders. While our passion for this subject is undeniable, it's essential to clarify that the information presented here is not investment advice. Instead, our goal is to offer an unbiased and comprehensive review of recent events that could impact uranium prices. Join us again next Tuesday for Uranium Spotlight.